Today we are going to discuss on Fibonacci retracements and also its illustration in Nifty, Bank Nifty, some stocks as well as in commodities. This Fibonacci retracement we have had sessions before. It's not new, but those who are joining new probably will just introduce you for 5 minutes and then take you towards illustrations. Now Fibonacci retracements, Fibonacci extensions are also there. So you can apply this Fibonacci in very innovative manner and in a very easy manner. See, one important thing why Fibonacci stands out is it can filter out a lot of sideways movement, because normally when you have a trend following system, you will have the moving average, then even super trend. All these systems are trending systems. Now trending systems has a disadvantage in a sideways movement. So we need something else which can filter out this sideways movement. To some extent the patterns and also Fibonacci can be very helpful when you use in tandem with the trend following system, so that you can identify the trend and then trade with the help of Fibonacci number or Fibonacci ratios. Now Fibonacci numbers already you may be familiar. Generally it is 1, 2, 3, 5, 8, 13, 21, 34, 55, 89. That is, you add two numbers, consecutive numbers, and you get the next number. These are all Fibonacci numbers. The ratios, Fibonacci ratios, which are very popular ratios, are the 3.8386 and 0.618. These are the two ratios which are very popular. Very popular ratios are 0.386 and 0.618, which you get when you divide one by the other, then the alternate numbers if you divide. So you get all these ratios. Then you get the 0.235, then 0.785. Okay, so these are other alternate the Fibonacci numbers which are generally used. So the Fibonacci ratios, or the Fibonacci ratios which are used. So the Fibonacci ratios and Fibonacci numbers can be very helpful in identifying how to trade the market, regarding how you can use it to trade the market. Now let me say, now you have got a Fibonacci numbers itself. So let us expand this number a little bit. 89, then 144, 233, 377, 610. So these are all Fibonacci numbers. So let us see how even these numbers can be helpful in our own in Nifty, as well as the ratios. So we will apply that and show, so that you can use it both for intraday as well as for position trading. Generally speaking, what happens is that the last important ratio is that at 0.785, which I told you. So once you identify a trend, how do you identify the trend? So the question comes, how do you identify a trend? In a normal Dow theory, you have, let us say, like this, right? So this is a downward movement. Now you have a bottom, you have a top here, 1, you have a 2, 3 and 4. So this third one, top, is lower than top 1, and top and bottom 4 is lower than bottom 2. So this means you are in a downtrend. So when you're in a downtrend, you are always looking at some point to sell, right? So what you should do, the last point is that the trend change will happen only if this retracement, 3-4 retracement, is retraced by more than 0.785 ratio. That is 3 to 4, whatever the numbers. Let us say this is 30, okay, and this is 20, let us say. So the number difference is 10. So 10 into 0.785 you do, it comes to 7.85. So you add the 7.85 to this. So the last important trend change pairs will come closer to 28, 27.85 or 28. So that is where the trend change will take place. So till that time you can go for a sell. And where are the places that you can go for a sell? You can go 0.386 and 0.618 are very important numbers. 0.235, 0.5 is also generally used. Normally most of the time the market, if it is a shallow correction, it can bounce up to 50%, 50%, it can come 38.6 to 50% shallow correction. So some deeper correction can take it down up to 78.5% of the entire move. So with this we can look towards using these numbers as well as the ratios effectively to do both intraday trading as well as the position trading. Now, one is the Fibonacci retracements, which we just now highlighted, that these are, let us say you are in a position to get a retracement which is 0.386, 0.618, then 0.786. So these are all the retracement ratios, okay, retracement ratios. So that can be used, that is, if the market bounces from this level, you can use these ratios to look towards selling. Now, let me say how you can use it now. Now, we have seen the fall 17,665 was the last high, right? Last high, from where it has collapsed below 17,450. So we have a in Nifty, it is like this, right? This is 17,842. Okay, this is 17,442. This is 17,665. So from there today, it has come down probably to 17,060 or 70 levels. So, and then it closed something like 17,175 or so. 17,175. Okay. Now, let us look at the ratios now from 665 to 17,060. Okay, which is approximately something like a 600 points, right? So it's approximately 600 points. I told you that 610 points is a very important one. 610 is a very important factor because that is a Fibonacci number. I told you 377, 233, 610. So it has come very closer to that 610, 17,665 to 17,060. It's approximately a 600 points, right? So 605 points. So now you don't need to even look at the ratio. Now what is the number I told you here? We have 233, 377 and 610. So you can now look at 17,000 since it has brought down up to this. So the next important level, if there's rallies, is 17,665 minus 377, right? So using the Fibonacci number, you'll have 17,665 minus 337. So that is 377. Sorry, 377. 17,288. So this is one important resistance that can come. Okay, so somewhere close to that. Then if it starts even to go up above 17,288, then we will have 233, 17,665 minus 233, which is 17,432 or something like that. So that is the low from where it broke down. So that will be a very important resistance. So the first area that we'll get is 17,288, then you'll have 17,432. So what happens is that tomorrow if there is a bounce back, okay, let the market bounces from this level, then what you should do is that you should look towards selling at 17,288, 17,432. That is not necessarily it should happen only tomorrow. I'm saying that over the course of next few days, if it bounces to 17,432, then it looks definitely like a good sell. Okay. So what is the area? 17,665. And if you look at the 78.5% retracement approximately for 610 into 0.235, that will come to 144 or so. So 17,665 minus 144, it is coming 17,520 or so. So the last place that it should be 17,520. So the trend change can take place only if it starts moving above 17,520. The trend change can take place only when it starts moving above 17,520. And so till that time, around the 17,520 or 525, I think we can be an effective seller in Nifty. So the overall picture that you can get right now is you can go for a sell till 17,520 is not crossed, and 17,520 effectively can become a very important stop loss. So now you can plan your strategy, wait for some up move, and then do that. So what will you do now? Now, so the first level that you will look towards selling is 17,288, then 17,430. So these are the two levels which you will look towards selling. A stop loss above 17,525. So this is for position trading, and then you will look towards a drop which will take you in the pattern. Now that we will look towards how should we look towards that? Now you have got already 17,665, right? 17,665. The same Fibonacci number, which is 610, has come. So the next numbers is 610 plus 377 is 987. So it becomes 987 is the next Fibonacci number. So where all it can go for a support 17,665. Okay. Now if it's going to collapse below 17,060, okay, then it can come 610 plus 377. I told you 987. Sorry. So approximately let's make it as 1,000 points. So this can be 16,665. This is one big support level. This is one big support level. But should it go directly to that? Not necessarily, because you have got from 610, you have got 377 added. But there could be, other numbers which can be added, like 144, 233 and all can be added before this 277. So the supports that will come right now will be 17,060 minus 144. So you can keep it like this: 17,060 minus 144. So let me approximate it to 150. So this will come at 16,910, right? Approximately, I'm saying 17,060 minus 233. Okay, so this will come closer to the 16,820 or so, right? 16,825, 827. So these are the supports before it goes to 16,650 or so. So these are the areas of support. If it starts to collapse below 17,060, we can look towards support coming at this. So now your trading becomes easier. The plan is straight away to go for a sell on rally up to 17,440 levels, looking for a fall which could be as much to 16,650, but keep monitoring for position profit at 16,910 or 827. There can be some bounce back from these levels as well before it probably goes to the next lower level. So not necessarily it should exactly go to this. We should always look for some sort of a trend change. In that case, we should get out of it, not idealistic about any particular level. But what we are saying is that these are levels, important levels. So now we have not seen the graph much. We have not seen moving average. We have not seen anything. So very clearly that we have been able to identify the place of resistance and supports. And based on this, we are going to look towards taking our trading calls, right? So today what happened? It collapsed from 17,060, got down up to 17,060. Now when it started to bounce back, it had a resistance closer to 17,200, which is approximately the same 144 points. I told you, this is 144. 17,060. So the first came at 144, it should come. So closer to the 17,204. So this is the first area of resistance. Okay. So since it has gone up to 144 levels, this one. So the other areas that we can look at 17,060 plus 89, which is 17,159. 17,159. Okay. Then 17,060 plus 55. 115. 17,115. So now it has gone up to 17,204. We can look towards selling, which could be below 17,159, keeping a stop loss of 17,204. Let us say tomorrow it doesn't rally at all to 17,288. It starts falling. And it cuts 17,159. Okay. then in that case you can go for a short below 17,159, keep 17,204 as a stop loss, because normally if you're looking at the Nifty, the smaller moves in intraday could come with the difference of say 45 to 50 rupees. So that's the normal call that we can take. So that means this if it starts to rally above out to 144, then a fall below 89, okay, looks to be an appropriate place, because there itself we are getting something like a 55 points difference, which is a good level indicator to go about. So Nifty itself, you can you can use that. If it starts to bounce above, if the market is if it starts to rally, if it rallies by 233 points, then in that case, if it falls below 144 points, you can start selling it. There will be an 89 points difference stop loss initially. But if it starts to fall below 144, 89, then 144 points above becomes a stop loss. So you can design your own trading theme accordingly. So we will look at the Nifty, Bank Nifty, and take calls accordingly. But suppose, let us say, now we have illustrated in Nifty very clearly. We can use percentages also, because we have a percentage of 1.3%, 2.1%, 3.4%, 5.5%. Normally, I've told you that in Nifty, the 5.5% I told you is a normal level where probably a big trend change normally takes place. That is, if from a bottom it starts crossing above 5.5%, then the rally takes place. If there is a fall which is more than 5.5% from the top, then in that case the fall continues. So let us look at the same 18,114, 5.5%, 18,100 if you take into 0.945%, 5.5% is 17,100 approximately. So that is where it has come. So this seems to be a place where probably the trend change can be quite big enough. If it starts to fall, then it has to rally another 5.5%. Now we have seen in earlier also that let us say, see this particular place in market. So this was 18,600 and this is 17,600, 1,000 points approximately, that 5.5%. Now after that there has been only fall. Okay. Now once this starts is around the 16,600, 17,600 became the important place. So once it started go above 17,600, it went up to 18,350. Then any fall which is below 17,350, any fall which is below 17,350, so the fall had taken place. So 17,003, it has come down to 17,000, 16,836 or so, which means any rally will meet resistance close up to 17,800 level. So here you see it went up to 17,800, came down, and then after that, if you see, there was a complete fall, and from here when you looked at 1,000 points, that is 16,650 or so. So once it started to cross 16,650, it went up straight away up to this place, and 18,114, and 18,114, 17,001 today's thing. So even if you have traded this, I think this 5.5%, 6% thing, I think we would have still made money, right? So the 5.5% is an important place where the trend change keeps taking place. So if this 5.5%, the 23.5, 38.2 is that in the 38.2% is approximately 2.1%. If you look at the 5.56 into 0.386, is approximately 2.1. 50% is 2.8. Then 3.4 is 6.618, and then 4.5 is going to be the 78.5% thing. So whenever there is a rally, now 17,100, it has to cross about 18,100. So there will always be resistance now at every percentage of points, 1.3%, 2%, 2.8, 3.4, all those percentages will start resisting. So that means from now, since it has come up to by 1,000 points, normally a 3% thing I told you is around 500 points. So 500, 550 points it has to rally before we can say that probably we could be looking towards some sort of a rally back. So at least that 17,500 600 has to come, which is basically this place, approximately 17,660 or so. So this is going to be a very, very important resistance now. Getting above 17,600 is not going to happen that easily. So now any rally that takes place by 500 points, 400, 500 points, I think it's time for you to put in a sort of a put option, or probably you can put in a put spread or so, and you can keep some sell around some 18,100 call or so. So these things you can make an attempt. So straight away on any rally you can sell 18,000, 18,100 call, or you can also do a put spread, okay, between 17,500 after it rallies to 17,350 or 400. You can just try and probably do even out of the money put of 17,000 or so. Probably if there's a chance that you may probably get good profits for a small loss, because what you can do is the ideal strategy will be is just do a 17,000 put thing and then 18,000 call sell. In between you will not make money, but below 17,000 you will make very good money, and above 18,000 only you will make a loss. And so at that point of time when it comes, you can remove the 18,000 call. Okay, so on any rally you can just think about 17,000 put and 18,000 call sell. Okay. Or you can limit yourself by doing probably a put spread and a call sell at a slightly higher level. Okay, so these are strategies, and those strategies we will come into that. Having known the views, we will do that. So the basic point that we are trying to stress is that once it is above 5%, if you see in this market, once it's in this case, now it was at 14,150 and 14,150. If I look at it, almost 1,000 points, so 5.5%, so 15,000 and odd. So once it started to go above this, then we have a it was only a rally. From this, there was only a rally, and above 5.5%. We were just on the we were just on fire. We were just on fire. Okay, and till that place. So above 15,100, we removed it only here. Okay, which is 17,670 or so. And whatever that we bought here at see, this was approximately 16,410. So 17,410 to 17,500 levels, whatever we did can be removed at 17,350 or so fall. So not much of a loss. So once it started to move below this, so once we started to this was a profit, 17,350, and from here some 15,671, 16,661 profit, and our 16,000 and here 16,671, 17,100, there is a profit. So considerably we have made totally a profit in the entire balance. So with a very, very small loss of somewhere in between, we would have definitely made a huge amount of profit by looking at this. So when you are down with more than 5.5% or so, then in that case you can think about some sort of strategy of put spread buying or put buying, and then look towards rolling it over to some higher levels if necessarily to be done. Okay, so those things will look at a little later time, but right now, yes, a put spread will work, okay, at some higher level, or a put also will work. That has to be strategized properly. Okay, now we will look at the there's another thing which is called the Fibonacci extensions. Now I will illustrate it to you very easy concept. And see, there is how do you make a projection? So let us say I told you in terms of ratios. Okay, so 17,662 or 665, it fell down to 17,060 or so. Let us say the market rallies from here, it goes to 17,288. Okay, then it starts to fall. Let us say, let's assume this case. Then how do you make a projection? So this is around 600 rupees. Okay, 600 rupees. Now the top is 17,288. The top is 17,288. So from there it has to fall down, below. Okay, 600 points is this thing. So what you do is that you take a ratio 600 into 0.5, let us say 300 rupees. So 17,288 minus 300. So this is an extension. This is all called extension, Fibonacci extensions. Then 600 into 0.618. Okay, you get 377, 375 or so. 17,288 minus 375. So these are all the next levels. So once you have these levels, then in that case, if one level is broken, you can buy above the other level. You can buy above the other level. So now let us see how it is happening in the case of a Fibonacci extension. In the case of a so this is the 1 hour chart. Okay, now we will draw the Fibonacci extensions. So what I'll do is that I will take from the highest point, and let me draw it in this place. So to illustrate what happened the last trading session, not today. So let us say I'm keeping it like this. See, if you can see, it moved to 17,840. Then it started to fall here. Then 17,656 is 0.386%. So once it started to move below the 0.386 region, it became a very heavy sell. Even below 0.235, it could have been sold. So 0.386. Then it moved up to 17,586, 590 if you see. And then it moved out to 17,526, 527 levels. Then 17,440. Now this was the support. So the Fibonacci extension that was done from this high to this bottom with this high, okay, the three pivots that was required to do the Fibonacci extensions gave clear support: 17,441, 17,526, 527, 17,586, 17,646. So all these levels provided or gave some support or resistances, right? So now we have the next level which went down up to say 17,332. 17,332, that has been today it never traded even to that level. So then the next level that comes 1.618 is 17,020, and it came right up to 17,067. But even 1.38, to say it has given only 1.618, it could have given probably 1.386% also it should have given. So we will do that calculation. So this is the 18,114, 17,600, 514 points. So for 514 points into 1.386, it comes to 712. And so 712, 17,842 minus 712. That is 17,130. So that was 17,130. Can just see 17,130 took support, and then it started to rally a little bit. Now once the 17,130 has been crossed, probably you had some support here. But 17,130, then we have the I told you 1.5 times. So 1.5 times of 514 into 1.5, 771. So 771, 17,842 minus 771, 17,070. So this is 17,070. You can just see 17,688. So you have 1.386, 1.5, they have not given those levels, but probably if we use this, then we'll know that these are important, other important supports which can come. So once it started to go, now we know that 17,070, then 17,130. Okay, how do we use it? And then after that is 1.235 times, which also has been not used properly, into 1.235. That comes to 634. 17,208. So in today's thing, we add, once it started to collapse, 17,208 was a resistance. Then 17,130 initially was a support. Then 17,070. So this was support, right? So these were areas which are within today's trading range. So it went up to 17,070, crossed to 17,130. Okay, so how do we trade it? Now easiest is once it came down to 17,070, then once it starts to rally above 17,130, then you could have gone long with this as a stop loss. So that is possible. Suppose if you feel that you want to be only short because the market is like that, then in that case 17,208 is a resistance today. Okay, so now if it starts to fall below 17,130, then after that, suppose after it crosses 17,208, if it falls below 17,130, then those who want to trade with very, very small stop losses can keep this stop loss and trade, right? And trade this, and it comes to 17,130, right? So this is the one way of looking towards trading in this market, where if for intraday, purely for intraday. Okay, so let us look at what happens tomorrow. I told you 17,070 is one, then so 1.618% is 17,010. So we have got 17,010 as a support. So if it starts to fall, okay, it starts to fall and it cuts even all these levels, let us say it cuts all this level, then in that case the first thing is that if it starts to fall below 17,130, then go short, keep 17,208 as a stop loss. Then let us say it comes to 17,010 for some reason, let me say 17,010. Then after that it starts to rally above 17,070. If it starts to rally above 17,070, you can keep 17,010 as a stop loss and trade. You can keep 10 as a stop loss and trade. So what we are trying effectively to do is we are keeping 50-60 points in the volatile market approximately as a stop loss to trade the market, which can probably help you to do the trade without being without having a sideways thing. So why? See, even in today's market, though the market moved literally well on a close to close basis, but if you see on the intraday, on an intraday, I put an hourly chart, but let me put a 15-minute chart. It is still not a clear trend. See, it came down, it went up, all these things happen. So probably if you just trade the intraday, you would have still been a little bit frustrated. So the best thing is to go about it and say now, let us say this was the 17,130. So if you put in a 17,130, because this low which came is 17,160, we have not got anything clearly above 17,160. So 17,208 was there, and it went up 17,178, then it fell down to 17,130. So once it started to move above 17,130, very clear, you can put this as a stop loss. See, once after that it did not come, 123 came, but 208, let us say it moved up to 199, 200. So once it starts to cross 200 only, you should put in a 17,130 as a for a sell. It has not crossed 17,208 after it fell down to this level. Only thing it came down to this level. So if at all you are shorted below this, let us say 17,208 if you have shorted today, okay, then you could have put one level above that as a stop loss. So let me assuming that you have put a stop loss, you have sold below 17,130. Assuming you put a stop, you are now done 17,130, then your stop loss is 17,208. Then your stop loss becomes 17,208. If you had wanted to take profits, what you should have done is some monetary management. So it went up to 17,070. So you should have had two contracts. One contract you should have taken profit, okay, and another contract you should have kept it to 17,208 stop loss. So what happens in that particular case is you have a chance of making a break even in case if it rises after next day it rises, or the same day it rises. So one taken profit, second one is a loss, net is break even. Suppose if the trend continues on the downside, one contract has profit, second contract will have extreme amount of profit. Suppose if it doesn't fall to the next level and then goes up to a higher level, then there are two contracts which are stopped out at some small losses. So that's how you normally look towards trading. And today, so what happens right now, we should look towards 17,130 break, 17,130 break, and put in the 17,200, because intermediate levels we are not able to have any particular Fibonacci like 17,000 This is 138, so 130 we need to put. So 130 clear short below 130. Probably we have to go for that and put in a stop loss about 17,208. Okay. So this is the way we normally do the trading. Now we will look at the Bank Nifty to get a little bit of illustration, the same Fibonacci. So we will look at the daily chart. So let's look at the same 5.5% concept. Normally it applies very much to Nifty. In stocks, depending on the volatility, it will be different, because a 5.5% fall in the case of stock could mean something like 11%, 11.25% in individual stocks, particularly high beta stocks. It could be ICICI. Reliance may not have much. It's not that high beta compared to Nifty, but there are other stocks like ICICI which can probably, or even Tata Motors, all these things will have 11%, 12% swing. So you need to be careful about that. So whatever that we are showing as a 5.5% in Nifty is not the same 5.5% for stocks. Okay, probably that 5.5% can hold for big commodities like gold. Okay. In a more volatile commodity and crude, I think it may not stick. So we have to use our previous experiences and do that. And so here we see the let us say this one, that is the Nifty, Bank Nifty, and it went up to 38,765. So approximately 2,000 points is very much required, and that is around this 36,765 or so. So that is where it is. Today it has come closer to that price, right? So I think any further fall in Bank Nifty from here could probably mean that we are into a big downturn, which could probably take it to much lower level. So here we are looking at something like 2,000 points swing, and so in the case of a Bank Nifty, if it falls further, then I think probably we have to look towards further and further falls. So now the same Bank Nifty and the Fibonacci thing that we will go for that. Now here probably the numbers that I showed you, the number of 144, 233, 377 and all. Probably in Bank Nifty we have to slightly adjust because it is a higher number, because it is a much higher number. So we have to look at something like 610, 977, 1500. So we need to look towards some higher numbers as far as Bank Nifty is concerned in the same Fibonacci numbers. So in same Fibonacci number, what means of 1.2, 1.3% in case of Nifty, which could be around 200 points, can something mean like 400, 500 points or so in the case of a Bank Nifty. So if you want, you can use the ratio. That's where the ratio will be helpful for you. So the general thing that you can go for it is 1.3%, 2.1%, then 2.8%, then 3.4% can use, and so then 5.56%, and before that you will have 4.7%. So these are the numbers that you can normally use. Okay, so now we are at 5.56% as far as Bank Nifty is concerned. So this is 4.7% means, so you can use that 4.7% from the top, 4.4% from the top. So all those things should now look towards giving you some sort of a this one. So normally we know we should not expect a fall which is much below this point, 2.1% or 1.3% from the top. So that means somewhere we are expecting that the top has been made. The top has been made, and we should be looking towards a further fall as far as the Nifty is concerned, Bank Nifty is concerned, which could take it down up to 9%. Because there's 5.56 plus 3.4, it comes to 8.9 to 9%. So in the case of Nifty also, what probably could happen is another 3.5% fall. That means 500 points from the 17,100 which is what I told you, 16,600. So 16,600 is the next important levels of support as far as Nifty is concerned. And in the case of Bank Nifty also, 3.4% means another 1,000 points of fall from this particular level is a complete possibility as far as Bank Nifty also is concerned. We are in the midst of an earnings season, right? So we have already got disappointing results from HDFC. Results are good, but it's below market expectation. Infi today was pummeled down by around 6.5%, mainly because the results were also slightly below expectation. So what we are saying is that you can use the Fibonacci numbers and ratio to know where all it can, first of all, it can move, and how to use it for even for intraday trading. That's what I showed you as far as Nifty is concerned. So let us say in the case of Bank Nifty. Now I told you the big trend is going to get broken. Okay, if it starts to fall further, the big trend is broken. Okay, so we should be out of that thing. So any fall, probably in the case of Bank Nifty, should be viewed as a fall and not as a correction. Okay, and not as a correction. So let's look at where all it can move if it falls further down. So that will straight away put a Fibonacci retracement from the bottom, from this level. So it can move up to this. Okay, this is a 38.2% retracement. Then you will have 50%. Then a 61.8%. So these are all complete possibilities as far as Bank Nifty is concerned. So we are looking towards a move which could be at least 35,460, because there is a 50% retracement. So 38%, it is very closer to that. So 50% retracement can come very closer to this place, which is 35,460, which is what I told you could be around 10% fall from the 9 to 10% fall from the top. So this is a next important level that can be expected as far as Bank Nifty is concerned. Now, if it starts to rally, this particular levels will offer resistance. 37,290, 37,290.95 will offer a very important resistance. Now, let me say. Okay. Now, suppose if it is fallen by 5.6%, then any rally 1.3%, 2%, 2.8%, all these things will become, I told you, will become important sell levels to be looked at. So now let's look at the Fibonacci extension to know what probably we could have done today on an intraday basis. Now, for which I am doing a Fibonacci trend extension. I am doing it from this level to this level. Okay. So if you see today, the fall was 36,489. It came. The first 1:1 support was projected at 36,489, and it touched the 36,489. So the next levels of resistances that are coming, because it fell to that level, the resistances were coming closer to 36,809 than 37,061. So now we will look at the 15-minute chart and 1 hour chart to get a slightly better picture. So we'll remove this first of all, and we'll go to the 15-minute chart. So in the 15-minute chart, we will Fibonacci extension we are using. The tool is available in TradingView. Okay. So today, first of all, if you see, it opened about 36,804. It opened about 36,804, right? And once it opened below, once it started to crack below 36,804, we should have put a stop loss about 37,056 and traded it. So the first thing was a sell below 36,804 with a stop loss about 37,056. Sell below 36,804 with a stop loss of 37,056. Today we should have done this trade. Okay, so maybe something like 200 points or less than 200 points. Sorry, so not. There's always a problem in because of the big numbers, not to 252 points. So 252 points in Bank Nifty is 0.6 points on percent points. Okay. Which is approximately equal to 85 to 90 points in Nifty. So this is the place, and if you look at the next important support, it was this 36,484. So it dropped here 36,441. Okay. So once it started to drop here, and from there it looked like going for a support. There are two ways we can do the trade. Okay. One is that we can wait. Whatever we sold here, the first profit could have been booked here, okay, because it's an intraday and already the market has fallen significantly. So this is a place where you could have taken the profit. Now after this, if you look at it, this 0.786, this one, okay. Now once it started to move above this, okay, after it fell to this, not here, from here, but once it started to fall at this level, then once it started to move above this, okay, then in that case, we can look towards going long in normal cases with this as a stop loss. But the overall trend is down. We know the overall trend is down. So what probably we could do, okay, is that we should keep a sell below this. So once it starts to move below this, we can go for a sell. Keep this I as a stop loss in normal intraday. But you should know that probably the market, even if it rallies, I told you it will not rally more than 78.5% retracement from this top to this bottom if the trend is to be intact. So what we can look towards is this. We'll remove this. So Fibonacci retracement we will draw now to know to what extent the rally can take place. Right? So this is the approximately the same place which we are talking about. So the rally at any point of time 78.6 may not come, so it can go up to this place. Probably 50% is here and 61.8% is here. So this one, even if you have gone short below this level, if you want, you can keep adding some shorts here. Okay, you can keep adding some shorts here and keep this as a stop loss. So that is one way of strategizing your sell. Alternately, if you want, you can remove your trade at this place. Okay, if it starts to move above this, then once it starts to move somewhere closer to this place, you can put in a sell with this as a stop loss. So that is also an alternate way of doing. Okay, so right now it is just slightly managed above this. So the trade doesn't look to be anything of any big bullishness right now, but tomorrow being tomorrow, we do not know. So any surprise upside will definitely meet resistance at any one of these levels, and once it goes to one of those particular level, then it starts to fall below any of that level. Let us say it goes to 37,217, goes to then it starts to fall below 37,36. Then you can even go for a short. Okay. So this way you can look towards good amount of trading possibilities, and in order to avoid whipsaws, okay, I'm just telling you that in order to avoid whipsaws, you should look towards putting a proper stop loss. The proper stop loss right now, the big stop loss now of course is 36,800. The big stop loss is 37,655, which can probably eliminate a lot of sideways errors, but for which you need a slightly higher level to go for a short. So please wait for some up move towards 37,200 or so. Then in that case you go for a short, keeping 37,657 as a stop loss. Okay, so there you'll have only 300 to 400 points, which is only 1%. Effective, it could be very, very effective, and then you'll have a further fall which can help you to get rid of this. So that way you can look towards using this in any one of these methods. And let's look at even for ICICI, just one or two stocks we will look at it. So we'll look at the first big chart. I told you that normally in case of that is the stocks. Normally, even 10, 11%, 12% rise or fall is quite common compared to the Nifty. So, if you look at this, from 860, approximately 830 or 840, when Nifty fell by a certain amount, because Nifty fell by more than 5.5%, it came down, right? So we can put 11% this one. In this case, say it was approximately an average is on 840 to 850 levels, 840, 850 levels into 0.88, 12%. Let's put it 748. So 748 levels is a so somewhere here, the market started to cut, okay, and from there, you needed another 10-11% for it to rise. So if you look at this rally, this is 707, 770, so less than 10%. So once it started to again move 10 to 11% on the upside, we can go for a buying as far as the stock is concerned. And right now, after it went up to 836, so approximately we had to put some 90 points or so. So 750, 745, 740 levels is 743. So below this level, I think one should not hold on to the stock. And here again 10-11% from this place, which is approximately 642. So above 642 into if you put into 1.12 or so, 719, 720 levels. So here it is 720 levels. So once it started to rally above that, then we are again on board as far as ICICI is concerned. Now it has to come down from 772, approximately 680, 690 levels. 11-12% will be approximately 680, 690 levels, below which I think probably somewhere around this, which can again trip the market to a further low level. So this is how big trades are generally taken, okay, which will help you to identify some important positional trades. So now we will look at gold. Last time itself we said gold went up to 2000 levels today, right? Closer to 2000. So we expect the resistance closer to 2016. Okay. So you may ask how we are expecting the resistance at 2016. So let me go for the monthly chart. This monthly chart, right? So let's look at the retracements that have taken place. Now let me put a Fibonacci extension for this, a Fibonacci retracement first of all. So let me say whether this is from this level, whether 23.5% retracement has come. Yes. So if you see from this top, okay, 23%, so 38% retracement. So let's look at the extensions. Okay, Fibonacci extension from this place. See, this was the 1949. So when it started to rally, it had a first place where 1920. 1920 offered a resistance. So now when it came close, after it rallied, when it came closer back to 1920 also, it started to rally. So 1920 was a very important level of division for the market to again go up. So it was able to rise closer to the 1919 1920 levels. So now it has gone up to so let's look at the weekly chart now. Fibonacci retracement. So let's look at this from this place, whether it has gone. See now it has broken 23.5% here, 1979, right? So it was able to break this 1979 from 2071. So 1980, 2071 to 1980 is approximately 91 points. So on the 91 points, now the Fibonacci extension is to be drawn. The first thing is 91 points from 1890. So 1890, right? So I think 1980. So 1980, once it's broken, I think probably we are looking towards the long side of the market only. Okay. So this is a very, so I gave 2016, I just missed it. So 1980, about 1980 now, it looks as if the market is heading towards higher levels right now. So 1920 seems to be a good bottom, and the it has picked up about 1980, which is a good sign for the market going up. So here also, if you see, generally speaking, you have got 6%, 5.5 to 6% fall, which takes place, because this is this 2070 we have to average out, or on a daily basis. Let's say what was the close. So let's say on that day 2070 also was seen, 1981 also was seen. So let's look at the average of that day, 2070 plus 1981. So the average was 2025. So in that, let's look at the 5.5% fall. 1915. So approximately a 1915 on an average. Okay. So let's say close is 1927. Okay. Here 1918 is the close. Okay. You can see the close 1919. So average we are able to get that 1910, 1915, 1915. I think we are getting a good, decent this one. The 5.5, 6% seems to be a very important dividing line even in commodity markets. So if you see, even previously here it went up to 1877, which means 100 points down, approximately 1775, 1776 is the close. So if you see, the best close here was 1867. So 5.5% approximately means something like 100 points, $100, which is 1767, 1770 levels. Okay, got that. So from there it started to move up. So this 5.5% concept is a very clear thing which divides, and we can see even in SPX. This is the US market. This is the US market. So we have 4637, 4637 into 945. That is from the high we are doing 4381. So 4381 is a very important place, and that is where it is right now. See this low, 4381. So that's exactly 5.5%. And that is what is mirrored even in the Indian market. If you see 18,114 to 17,100, just 1,000 points, approximately the same 5.5% is there. So right now we are at the exactly dividing line, and any further fall from here could be could lead to further meltdown for another 3% or 4% of fall, which is completely possible as far as the market is concerned. So this is now trading that 5.5% concept, this one. In the case of SPX global market, it's around 200 points, 230, 240 points. In Indian markets right now, in the case of Nifty, it's around 1,000 points. And the case of Bank Nifty, it is something like 2,000 points. So this will give a big picture that if there is a further fall in SPX below this place, then the trend changes further. It intensifies, I would say. And in the case of Nifty, if it falls further now from the 17,100, it is going to have a fall further. But right now, any rise in rally also probably can meet a resistance much before 17,660. So which all could come at 17,288. It could be 17,440, 17,520. So these are the levels where probably we will see resistance. So accordingly, you can position for a further fall. Okay. So thanks very much for attending this. So in case if you have any questions, you can ask now. Thank you. So thanks for your participation. On Thursday, we will again look at how to trade with small capital and the roller of options. Okay, thank you very much.